This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged higher on Wednesday on supply concerns, with the U.S. stepping up efforts to limit Venezuelan and Iranian oil exports, while a bigger-than-expected drop in U.S. crude inventories also lent support. Brent crude futures gained 15 cents, or 0.21%, to $73.22 a barrel by 0723 GMT, while U.S. West Texas Intermediate crude futures rose 16 cents, or 0.23%, to $69.16 a barrel. Crude oil prices maintain their bullish bias after Trump's sanctions on Venezuelan oil, raising supply-side concerns. Priyanka Sakdeva, a senior market analyst at Philip Nova, wrote in a market commentary on Wednesday.
Executives from the world's top commodity trading houses expect a well-supplied oil market this year, with concerns remaining over global demand growth. Oil prices could continue to soften as global supply rises, including with the Organization of Petroleum Exporting Countries and Allies, OPEC+'s plan to unwind voluntary output cuts in coming months, the executive said, speaking at the FT Commodities Global Summit in Lausanne. There are some threats to supply, but by and large there is adequate supply for the next couple of years, said Vitol Chief Executive Russell Hardy.
Moving on to the top news in the energy sector.
The United States reached separate deals on Tuesday with Ukraine and Russia to pause their attacks at sea and against energy targets, with Washington agreeing to push to lift some sanctions against Moscow. While it was not clear when or how the Black Sea maritime security deals would start, the agreements are the first formal commitments by the two warring sides since President Donald Trump's inauguration. Trump is pushing for an end to the war in Ukraine and a rapid rapprochement with Moscow that has alarmed Kyiv and European countries. The U.S. agreement with Russia goes further than the agreement with Ukraine, with Washington committing to help seek the lifting of international sanctions on Russian agriculture and fertilizer exports, longer Russian demand.
Global renewable energy capacity registered record growth in 2024, but progress is still falling short of the 2030 renewable capacity target, a report by the International Renewable Energy Agency, IRENA, showed on Wednesday. About 92.5% of energy capacity added in 2024 came from renewables, at 585 gigawatts, GW, marking record annual growth of 15.1% and lifting total renewables capacity to 4,448 gigawatts. However, progress remains below the 11.2 terawatts needed to meet the Paris Climate Agreement and the global goal of tripling installed renewable energy capacity by 2030, which demands an annual growth rate of 16.6%. Next, we have the top news in metal markets. China released plans on Wednesday to expand its carbon trading market into the steel, cement and aluminium smelting industries, a move that will force another 1,500 firms to buy credits to cover their emissions, the Environment Ministry said. The expansion will bring the total volume of climate-warming carbon dioxide covered by the trading scheme to 8 billion metric tons, more than 60% of its total emissions, ministry spokesman Pei Xiaofei said at a briefing. The scheme currently covers around 5 billion metric tons of carbon dioxide emissions from 2,200 power firms.
India's government was confident that strong domestic demand for steel would offset the European Union's plans to tighten steel import quotas from April, a source with direct knowledge of the matter told Reuters. On Tuesday, the European Commission said it would tighten import restrictions on steel from next month in a bid to shield the ailing European steel sector from surging imports. The EU will reduce import quotas, known as safeguards, limiting the amount of steel that can be imported into the bloc of 27 nations tariff-free.
We will now look at the top news in the agricultural sector.
European Union soybean imports for the 2024-25 season, which began in July, reached 9.84 million metric tons by March 23, 2025, up 7% from the same period a year earlier, according to data published by the European Commission on Tuesday. EU rapeseed imports in the same period totaled 4.84 million tons, up 13% year-on-year. Meanwhile, soy meal imports rose by 27% to 13.60 million tons. However, the Commission said that export data for Italy has been missing for the past 15 weeks and export data for France has been incomplete since the beginning of 2024.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.